Revision of cost budgets. As a project progresses into construction, it is key to ensure the cost budget is updated to reflect the inclusion of any variations and their associated budgets agreed upon. Management of budgets throughout the project. Once work commences on site, whether by contract, purchase order, or through internal wages costs associated with the activities, other commitments, or committed funds. Finally, as invoices are received for work, funds need to be tracked differently again. In a budget, these are spent costs or expense costs. Management of this phase of estimating and cost control are covered in the next module. Converting estimates to project budgets. For cost control on a project, the construction plan and the associated cash flow estimates can provide the baseline reference for subsequent project monitoring and control. For schedules, progress on individual activities and the achievement of milestone completions can be compared with the project schedule to monitor the progress of activities. Contract and job specifications provide the criteria by which to assess and assure the required quality of construction. The final or detailed cost estimate provides a baseline for the assessment of financial performance during the project. To the extent that costs are within the detailed cost estimate, then the project is thought to be under financial control. Overruns in particular cost categories signal the possibility of problems and give an indication of exactly what problems are being encountered. Expense-orientated construction planning and control focuses upon the categories included in the final cost estimation. This focus is particularly relevant for projects with few activities and considerable repetition, such as grading and paving roadways. For control and monitoring purposes, the original detailed cost estimate is typically converted to a project budget, and the project budget is used subsequently as a guide for management. Specific items in the detailed cost estimate become job cost elements. Expenses incurred during the course of a project are recorded in specific job cost accounts to be compared with the original cost estimates in each category. Thus, individual job cost accounts generally represent the basic unit for cost control. Alternatively, job cost accounts may be disaggregated or divided into work elements which are related to both particular scheduled activities and to particular cost accounts. In addition to cost amounts, information on material quantities and labour inputs within each job account are also typically retained in the project budget. With this information, actual materials usage and labour employed can be compared to the expected requirements. As a result, cost overruns or savings on particular items can be identified as due to changes in unit prices, labour productivity, or in the amount of material consumed. The number of cost accounts associated with a particular project can vary considerably. For constructors, on the order of 400 separate cost accounts may be used on a small project. These accounts record all the transactions associated with a project. Thus, separate accounts might exist for different types of materials, equipment use, payroll, project office, etc. An example of a subdivision of cost codes is detailed as follows. In developing or implementing a system of cost accounts, an appropriate numbering or coding system is essential to facilitate communication of information and proper aggregation of cost information. Particular cost accounts are used to indicate the expenditures associated with specific projects and to indicate expenditures on particular items throughout an organisation. Converting a final cost estimate into a project budget compatible with an organisation's cost accounts is not always a straightforward task. Cost estimates are generally disaggregated into appropriate functional or resource-based project categories. For example, labour and material quantities might be included for each of several physical components of a project. For cost accounting purposes, labour and material quantities are aggregated by type, no matter for which physical component they are employed. For example, particular types of workers or materials might be used on numerous different physical components of a facility. Moreover, the categories of cost accounts established within an organisation may bear little resemblance to the quantities included in a final cost estimate. One particular problem in forming a project budget in terms of cost accounts is the treatment of contingency amounts. These allowances are included in project cost estimates to accommodate unforeseen events and the resulting costs. However, in advance of project completion, the source of contingency expenses is not known. Realistically, a budget accounting item for contingency allowance should be established whether a contingency amount was included in the final cost estimate. A second problem in forming a project budget is the treatment of inflation. Typically, final cost estimates are formed in terms of real dollars, and an item reflecting inflation costs is added on as a percentage or lump sum. This individual allowance would then be allocated to individual cost items in relation to the actual expected inflation over the period for which costs will be incurred.